Well, good morning, good evening, traders from around the world. My name is James. I'm here on behalf of Pivot Point Trading, bringing you a little bit of individual share analysis leading into the trading week, beginning Monday, the 24th of February, 2014. If you want a little bit of a theme and a tone for the market leading into the trading week, have a look at the previous YouTube video which I've done. It's literally the one before this, or subsequently before this. That will really get you in tune with what we expect the market to do. This video here, special video anyway, is just simply going through some individual trade setups, so through our top 12 list, which we go through each week in Pivot Point Pro over the weekend. So having a look at Apple anyway, we've got this trade set up at 522, looking to trade down to 512.60 in the event that the market actually sells off. Going through some of the technical indicators, you can see the exponentials are moving sideways, really reflecting that sideways market movement. We are sitting on that 100 simple moving average, but if we get below that, it really shouldn't take long until we come down and retest these old support levels which were established in November 2013. On top of that, you can see the stochastics crossing bearish, RSI is tanking, and that divergence which really played out on the MACD is really starting to turn down. The histogram, as you can see, is ticking down. Everything is telling us that Apple wants to head lower. Over the weekend anyway, or in addition, there was a lot of talk about a crackdown on tax evasion, or sort of creative accounting practices which are going on, especially in the technology sector, which are really influencing also the NASDAQ. So it wouldn't surprise me whatsoever if you do see a little bit of a gap on Apple to the bearish side, factoring in and pricing in that news into the market pretty much straight away on Monday. Let's move on to Amazon. Anyway, Amazon is really sort of a bi-directional trade setup. You can really go either, one of two ways. You can see in green here, I've got the two triggers, one at 375.72, this is our bullish trigger for the week ahead, and one down here at 335.20. My hunch is telling me that Amazon wants to move down. If I go through some of the technicals, you can see we've had a gap on earnings, and we also have established that exponential moving average cross. On top of that, look at this volume, this crazy sell volume coming into Amazon. A lot of people are starting to dump this, and if we do get below this old swing low, this old support level, and this little bit of a doji candlestick down here, we are positioned very, very nicely to close the gap at 325.60, which is still open from October 2013, and come down really and to essentially retest these old support levels at $310 a share. At this stage, we will be coming into this primary bullish trend, which has been in effect for a couple of years now, so this is a very strong support level, where I expect Amazon will at least slow down in the intermediate picture. On top of that, you can see the weakness again, very strong bearish divergence across all three of our oscillating indicators, telling us and indicating that Amazon again is a little bit sick at the moment, much like the overall broader market. In addition, we have AXP very close to a bidirectional trade setup. However, this shooting star candlestick, which was made on Wednesday last week, is really sort of a reflection of the overall market also. The market's looking weak, AXP is looking weak. We did close this earnings gap over here very, very quickly. This could well and truly be an exhaustion gap, which is also a terminal reversal chart pattern. On top of that, we have divergence, which is the primary function of the MACD, which has really been taking place since November 2013. Generally, when we get rollovers in the market, it does take about 4 to 5 months. Pardon me if I can just go back to the right screen. 4 to 5 months of a sideways market move before we break down. The thing is, we need to break down below these exponentials. So I've got two triggers, one a little bit riskier here at 87.66, another more conservative entry here at 85.78. This will bring us down to lower lows at 83.08 and 81.38. In addition to this, you can see that we've actually made a new swing low relative to the swing low established in January. And at the moment, we're also establishing a higher low, which is a 1, 2, 3 trend reversal pattern taking place on AXP. Very, very interesting. Baidu, again, not a whole lot to really talk about. We've got the bullish breakout at 186 and also the bearish breakdown here at 162.57. Very, very similar to many of our top 12 shares, which we cover over the weekend and go through the technical picture for. But again, it's something to keep on your radar in the event that the market does decide to sell off very, very abruptly anyway. I do expect Baidu to close down here at 152.78. It's definitely something on my radar this week. You can see the stochastics is overbought, so is the RSI. We're up here at resistance levels. We're getting a series of shooting stars. We're getting a series of spinning tops. We're getting a series of dragonfly dojis. Every sort of indication or cautionary indication is telling us that, hey, be careful on Baidu if you are trading bullish. having sort of like the bullish theme anyway, what a good intro. Caterpillar is really one of the few shares in our top 12 list along with Google, which is actually breaking out and trying to trend. In the face of such a weak market, it's definitely something that I'm not getting too carried away with. I do have sort of a contingent order here at 98.45. It is a dotted line because I myself am not taking this trade in the event that price does close above this. I just can't do it in the face of what the market is looking at the moment. I am more, I guess, comfortable placing this 94.09 bearish trigger in the event that we do get a reversal or some form of pullback into this old resistance line, which is now going to act as support as we've broken above it. So Caterpillar is looking good in the face of the broader market, unlike FAS. Now FAS is simply a financial ETF. It tracks the financials traded on the US markets, and this is very, very interesting. We are here at a pivot point at $88 a share. This can go either one of two ways. We can either break above at 89.32 or we can break down below 82.55. Very, very neutral. I'm not going to let my emotional biases get in the way of this trade. Once price closes and confirms below or above, I'm going with the trade. Targets are in orange at resistance and also at old support lines. Having said this, we have also established a 1, 2, 3 reversal pattern. We've made a high, we've made a subsequent lower low compared to the lows made in December. And now if we do get a reversal here, we have essentially set up a lower high. That's why we call it a 1, 2, 3. It comes into and it stems from the research done or conducted through Dow theory. Very, very interesting sort of topic on general market form and the way markets tend to move, and really is a really good sense of timing in the overall market. So that's FAS, very, very neutral trade setup. Google again breaking out, very similar to Caterpillar in the way that it's sort of struggling in the face of such a weak market. I do have both a bullish and bearish trade setup. Do not get confused. This 1189 is not an entry. It's simply a stop to lock in our profit on this trade, which was placed a couple of weeks ago. I don't want to spend too much time on Google because it's not really noteworthy. I do not think too much is going to happen with it. HD, very nice sort of structure being sort of, I guess, highlighted with HD. However, we do have earnings coming up on, I believe, Wednesday, the 25th. It's actually Tuesday. It's probably aftermarket Tuesday. So it's something we can't really touch until after earnings. It will gap. It'll either gap up or down. You can never tell which way it wants to move until after the actual event. So please do not trade this leading into earnings. Wait, be patient, be disciplined, and trade the post-earnings gap. JPM, again, looking very weak. You can see here, I've actually pulled into this bullish primary trend. We're establishing some form of a head and shoulders chart topping pattern. It looks like we have got this very, very nice one black crow candlestick pattern, which is, roughly the second strongest reversal signal in the market. We are also essentially setting up a 1, 2, 3 reversal. You can see we've made a high, we've made a lower high subsequent to the December lows, and now again we're setting up that lower high relative to the January highs. So again, all of these shares are really reflecting a weak market, and really the opportunity at the moment, or with the current sort of technical landscape, is that on the short side. So selling short or entering into put contracts on various shares. You can see my trade set up here at 56.90, trading down to 56.01, or at least this primary trend line coming through here, and then down to 53.89. That is the overall trade setup on JPM. Very, very comfortable with this trade. Again, check out the oscillating indicators. Stochastics is giving us a sell signal, so is the RSI, and the MACD is sort of petering out around the neutral line or the signal line. So very neutral, I guess, on JPM, but the actual chart pattern and the sentiment is definitely starting to sort of transition. Netflix, again, we've had a couple of stair-step patterns looking the goods. Again, it's set for a bullish breakout. We've got the bullish breakout here at $444.10. We have a stop here at $422.70. So we are very profitable on our Netflix swing trade. Again, this could go one of two ways. It's not rocket science, so please lock in your profit, tighten your stops on the trade, and set yourself up for success with a new bullish breakout here at $444.10. Again, wait for a close and a subsequent continuation because you do not want to be whipsawed, especially trading such an expensive stocks such as Netflix, and if you're trading the underlying derivatives or the options which are tied to Netflix. Moving on to Starbucks, this is one of my favorite trades this week. We are set up perfectly for a bearish continuation from 72.34 down to at least $70.43, if not taking out the swing lows established down around the $69 level. The reason I say this is because, as you can see, we are transitioning from a bull market or a bullish trend into a sideways market movement. We've got that 1, 2, 3 reversal. We've had the high, We've had the subsequent low, we've had the failed rally, and now we've made another lower low. This may be the fifth, which could be the next lower high. You can see this if I just draw it on like this, and I'll put the lows in like that. You can see the general form. We sell off, we rally, we fail, we sell off, we rally, we fail, we sell off. This trigger here at 72.34 is set up for the next sell-off. It is just below the rejection of the 50, which is a very good indication that prices want to move lower. It's also below that 200 simple moving average moving higher, which is fantastic. You can see the volume picking up on Starbucks bearish. Very, very excited about this trade. If I change also to my oscillating indicators, you can see that it's naturally overbought. It is wanting to move lower on the stochastics, also on the RSI, and this divergence which has been taking place not only across so many of the individual shares but also across the actual 3 US indices is really starting to play out, and you're starting to see just how powerful divergence actually becomes when you trade the stock market. These signals you need to pay attention to, and you need to trade according to. Very, very important. So very excited about this Starbucks trade leading into the week, beginning the 24th of February 2014. In addition, and to of course conclude this market update, we do have XOM. Now XOM isn't really as I guess developed as many of the other shares. It is, or it does anyway, encapsulate a little bit of a head and shoulders pattern. Usually we wouldn't trade it until it breaks the right shoulder, or the neckline, which we call, but we are at a pivot point. We do have a bidirectional trade set up, 96.25 and then 93.26. I'm not going to walk through the technical picture with this. If you want to learn how to trade the market, however, please sign up for our free Axioms of Stocks and Options Level 1 trading course, 8 classes, 90 minutes each, roughly 12 hours of free trading content to get your way to actually being able to approach the market and trade the markets completely autonomously. It's very powerful when you can actually understand the markets yourself and act on your own decisions and are not relying on anyone else to give you information to obviously place trades in the market. Very, very structured course, and again, it is a scholarship, it is free. So that is a quick market update. Thank you very much for paying attention. I will update you during the week. Subscribe to the channel if you found this information important. All the best, everyone. Goodbye.